So Cisco's first resource put 295 million tonnes at 1.36% lithium oxide on the board. But that resource is increasingly becoming the starting point rather than the story. Q2 is now drilling to advance the resource, progress metallurgical work, and adding to its development team and preparing for its next major milestone, which is the PEA. So what does Q2 need to prove next, and how quickly can Cisco move from PEA into feasibility? Welcome back to Rockstock Channel. Joining us from Q2 Metals are President and CEO Alicia Milne and Vice President of Exploration Sage McCallum. Before we begin, RK Equity advises and owns securities in Q2 Metals. This interview is sponsored by Clean Elements and is for information and education purposes only. It does not constitute financial advice. Please do your own research. Sage, rather than going back over the resource in detail, what did it give you technically that allowed the project to move into the next phase?
Well, I mean, right away, coming up with a strong resource as large and as high grade as that is kind of the optimal scenario. Oftentimes when there's a discovery, it is just one small zone, maybe not suitable grade, but right away we're coming out with a very large deposit that can dictate a large scale, and then as well with that large scale, it has a pretty impressive impact on potential economics. So that's a good place to start, and that's what the MRE delivered right away.
Okay, and you've suggested that the eventual indicated resource could potentially be similar in size or even larger than the original inferred resource. What has to happen now for that to become a reality?
Of course, well, I mean, if we do follow up our current drilling, just going in between, filling the gaps of the existing drilling, we're going to get pretty well exactly what we had before with the inferred as we go into indicated. But of course, we will be growing tons and shrinking tons in some area as we're trying to define the outer edges of this deposit. Sometimes it just keeps going. Sometimes we define it where we expect it. So that's going to lead to some increase in size. But as well, we're intentionally increasing the size by testing new outcrop zones that we haven't yet even had a chance to test. So that's going to lead toward some of the growth potential as well here.
Okay. So if we strip the PEA down to the handful of things that really matter, what are the 3 or 4 technical questions it needs to answer?
Yeah, that's a good question. There's a lot of things that go into the PEA. Main things that we're answering here are going to be processing, exactly how we design, getting from ore to concentrate. And there's a few ways we can do that we've discussed in the past. One of those is DMS only or adding a flotation as well in a hybrid approach. So that's sort of the trade-off things that we're doing. And then the benefit of this project, as we've discussed many times, is the location within the lower portion of James Bay. So it's defining the right infrastructure around not just the mine, but also the transport to get to the ports. And of course, the scale is a big thing as well, that we have the ability to go big because it's a big resource. We could do something where we design a really small project, having a low capex if that's what we want. But, I think that misses a great opportunity to capitalize on the economics of a large deposit, Hugh. So we're doing a lot of those trade-off studies right now to achieve that, to define what the best approach is for this project.
I mean, that definitely makes sense. I mean, I think, some of the assets that are attracting the most interest at the moment are the assets with scalability. And I don't think there's many assets around the world that have got more scalability than your assets. So I think that definitely makes sense.
Yeah, there's no shortage of smaller 5 to 10 million ton or 20 even million ton deposits that are cropping up throughout the world. But this one is a very unique opportunity for sure.
Excellent. And let's just talk a little bit about the metallurgy. What is classed as advanced metallurgical test work compared to the sort of basic metallurgical test work that you've done before?
Yeah, of course. So the basic work was taking what we believed at the time were the most representative zones throughout the deposit, and just not making that question as, can this be recovered? And the answer is yes, of course. But the second phase, the more advanced work, is going to include a lot more variability of all the different textures of pegmatite throughout the deposit. It is fairly consistent throughout the deposit. There's no main zones that are higher grade or lower grade. So the variability is just going to make sure that everything's responding the same, which we expect it to do. And then as well, the other part is looking at including some dilution. So, when we're eventually in a mining process, there will be wall rock included into what goes to the mill. So it's just understanding how that affects the recovery. And as well, the iron content. There's ways to deal with the iron, but unless we do that test work, we can't really include that in any more advanced studies. So we've got a really good base on metallurgy now that we'll be relying on, but we'll get a few hints of additional work through this current metallurgy that we're doing now.
Before we continue, I just want to thank our sponsor, Clean Elements, an investor group focused on providing growth capital for critical minerals developers focused on the energy transition. Clean Elements has invested over $30 million to date in 2 companies developing high-grade lithium brine projects in Argentina.
So, Sage, as we talk about the current resource and the PEA, there's obviously quite an important tension here. You're trying to move a very large existing resource towards development, but you're also saying that there are some really interesting exploration targets still to test. So how do you balance those two objectives?
Yeah, of course. I mean, those new zones are actually fairly close to the existing resource. So the objective will be to, piece it all together because they're right next to the existing deposit. It's not like a whole new one. So the criteria is that it needs to be near surface. We don't want to find resources just for the sake of it at depth, and it needs to be that consistent high grade material that we've already been finding in the current deposit. So the idea is that with that near surface material, it will be just more economic because it'll be closer to surface and mineable and easy to include into the current mine plan that we're looking at right now with this PEA level that would then be included on the next go round of economic studies.
Okay. And without sort of getting ahead of the drilling, are there any specific targets that you're looking at around the existing discovery that sort of are really exciting to you at the moment?
Yeah, definitely. There's some really easy targets right to the south, north, and that CO2 deposit zone that we've been talking about for a while that we've tested but really haven't figured out yet. So some really nice, easy at surface targets. Yeah, it's be silly not to test them this year.
And from the technical side, what needs to happen to get to a high enough confidence to do a feasibility study? Is that just resource classification, infill drilling, etc., or do you need to do other stuff?
Yeah, of course, it's going to need to be increasing that confidence level above inferred to get to those more advanced level studies, but it's also the metallurgy, just defining what exactly our process is. There's many different ways that we can get the concentrate, but it's optimizing that for the project. So there's more studies for that, and it's engineering as well, trying to look for the optimal placement of waste rock piles and all that kind of stuff that gets further refined as we go from PEA beyond, because we're learning a lot as we go here, and it just keeps getting more refined with additional studies.
Yeah. I mean, to put it in perspective, I mean, we just hit 50,000 meters of drilling. So that's a big milestone for us. But on the flip side, like we're still, actively exploring Cisco and further, testing the how big it is and to the east, to the west, north, south, like it's still open in all directions. So just to put that in context, that we're trying to, move this forward as fast as we can, but
You're going for that number one spot. Biggest hard rock resource in the world.
Yeah.
Alicia, you've made a number of hires recently as the company moves into the next stage. What capabilities have you been adding? and how different does the Q2 team need to look at as Cisco transitions from an exploration project into a development project?
Yeah, no, definitely. It's somebody said to me the other day that we've increased our staff by like threefold over the last 2 months, which is amazing. We've had a pretty lean crew here, so it's been great to add to the team to start filling out the positions that we needed to in order to move Cisco forward. So we added Jean-Francois Tremblay as our VP of Tech Services. Sage and I have known JF for quite a few years. I believe we met him when he was at Arcadium. So, he's got quite a resume of working for projects, advancing projects forward. His main focus right now is going to be on the PEA and then moving forward into more advanced studies. And then we also hired Geneviève Morinville. She's our VP of Sustainability and Regulatory Affairs. So she's also got a great background in environmental work, permitting, First Nations, community relations, that sort of thing. And we've also known her for a few years. So it's been great. It's the evolution of the company, and it's growing from just being an exploration project to the next stage. And these are pieces that we needed to fill into the puzzle of how Q2 looks management wise, and they've been great.
World-class projects attract world-class talent. I mean, those resumes are very significant. We'll flash those, up here. So I think you have, I don't know, $70 million or so in the treasury, or just correct me if I'm wrong. At a high level, how far does the existing balance sheet take the company through the PEA, further drilling, and the next stage of technical work?
Yeah, so we do have 70 million Canadian cash in the bank right now, thanks to the financing that we did with Canaccord back in May. And that takes us through PEA, that takes us through feasibility. It gets us to where we need to be with Cisco. It allows us to get a bit more aggressive on what we're doing. Sage has, talked about all the drilling that's been going on. So, we have 4 drill rigs turning. That could potentially go up to 6 over the fall and winter, and just continuing to move the project forward.
Sounds good. I'm just looking at this stock. It's been a heck of a run in the past year and 2 years. 12 months from now, the market cap is about 613 million Canadian, and Q2 trades on the Toronto Venture Exchange, ticker symbol QTWO. 12 months from now, where should Cisco be if everything goes broadly to plan?
Oof, where should Cisco be? Well, with Sage and her team continuing to drill it, I'm sure they'll still be drilling at that point. But like thinking back, like where we were 12 months ago, we just completed, $26 million flow-through financing. And I think we had just issued like met results for holes, what was it, 18, 21, 23. So, we've done a lot over the last year. And I think with this $70 million, we'll continue to just de-risk Cisco and to move it forward as quick as we can. But as there's a systematic approach that we need to go about this as well. So just continuing to drill, continuing to build the team to move Cisco forward.
Sounds good. Thank you very much, Alicia and Sage. Great as always to have you on the channel, and look forward to having you on again soon as you tick off some further milestones, in particular the PEA.
Great. Thanks for having us.
Thank you.
Matt, we couldn't really put them on the spot about like what the PEA is going to look like, but Canaccord, who they referenced, raised a lot of their money recently, did put out an upgrade note earlier this week, upgrading their target price by 64% to $9.50 Canadian, which is 4 times higher than the current price. And they justified the upgrade by changing their valuation of Cisco from using, a exploration resource multiple of 320 per ton to now a risked NPV developer methodology, presaging, what the PEA might come out at. And when they presaged that, Sage was talking about what size they might do. Canaccord is prognosticating a go big or go home, 1 million tons, per annum, 4.7 billion NPV. And then they affix a 50% discount factor to that valuation to arrive at their target. So what do you think of that and what we just heard of them from that interview?
I mean, absolutely. That's what mining analysts will start doing now as we move from being an exploration asset into a production asset. And that's what I would be doing myself. I would be starting to look at the project in terms of mining and in terms of the NPV of a mining project, rather than just the EV per resource ton multipliers. So I think probably Canaccord is the first. I would imagine that other brokers that cover the stock will be doing it. They'll probably wait until they get the PEA results, but I think we will see more uplift of price targets going forward. Is a 50% discount too high? Is it too low? I think you can defend different ways of looking at it. I tended to err towards a larger discount earlier on in development, but I think even with a larger discount, you're still at multiples of the current share price. So I think that, it's nice to start to see people looking at this as a proper development project rather than just an exploration story. And I think we'll see more brokers moving towards that. And in the context of what Q2 are talking about, it's very interesting to see them building out their management team, because that's been something that a number of investors have come back on and said, well, it's not just about exploration, it's also about sort of building out your management team. It's about sort of employing somebody who could build this project. It's about bringing people in for dealing with the Quebec government on development, bringing people in to market the product and to place the product in the market and things like that. So I think all of these sort of moves are really positive, and they show that management's sort of thinking about sort of, building the asset. And of course, something that we haven't talked about, and we obviously can't ask the management team, is what sort of interest this thing is gathering from the point of view of the industry, and how many potential buyers there are sort of queuing up at their door. But I would imagine with this level of strategic assets, there will be quite considerable interest. And then obviously you're looking at what sort of multiple the industry would pay for an asset this large as well.
Sounds good. To be continued. Very exciting milestone upcoming in terms of their PEA. So encourage all of our viewers to look out for that and Q2 Metals. Thanks, Matt.